They missed. I think the answer is yes. Short term, long term, it's a great franchise. I think the story was the sell side got a little aggressive on numbers for fourth quarter, and the buy side got content, and effectively you're seeing an unwind. But long term, this is a fantastic platform. We've had a lot of questions today. Are bricks taking over from clicks? We don't think that's happening. Is something wrong with the cloud? AWS continued to grow at a mid 40% clip. And is the industry leader. Their ad business is growing 55%, a $10 billion run rate. So all the metrics look really good. What's happening is you're just seeing a deceleration of growth. And the market was not ready for that decel. Everyone thought the numbers could continue to go higher. You're lapping Whole Foods, and you've got tougher comps. And I think the story's changing from a revenue growth story to a profitable story. So Amazon's demonstrating a better bottom line too. So there's a lot of variation that's going on, but ultimately I think the answer is yes. Short term, long term, we still see a higher stock.
Which of the two sort of criticizable factors? One was that the revenue missed by a bit, by about $500 million, which is not insignificant. The other was what they said about revenues in the fourth quarter. As you look at those two things, can you separate them? Was one more important than the other in explaining why the stock is down so much?
The guide's the bigger issue for the fourth quarter. And I think when you look at the third quarter, the U.S. overperformed, right, both on top and bottom line. The international business is lumpy. Clearly, you're going to see more variation in international. So I think that was the big variable for us. But again, I think it goes back to the guide. They have historically been pretty conservative on the guide, I think, as everyone has noted. But there is a decel in terms of the unit growth. There's a decel across the board. And quite frankly, if you look across Snap, Alphabet, all the companies that reported, there is a minor deceleration. And that's inevitable given how big the numbers are. So we don't think the fundamentals are decaying. There's no cliff dive. It's just you're seeing a modest slowdown.
But Brent, that's the big problem. It's a growth company that's been priced for extraordinary growth, and it's got a multiple that demands growth to continue, not to decelerate. So at what point does sanity come in? I'm not saying your approach is insane, but I do think that investors are saying, hey, AWS has been growing at an enormous clip. You've actually seen a lot of competition in that space. And the top line used to be a place where people cared less about profitability. They gave you profitability, and here we are.
Yeah, I think it's settling in. You look at Google. I thought Google had a great, pretty clean print, and that stock's still off with a small deceleration. So I think, our view is that Google is in a better position. It's one of the least asked on names. It's definitely not as crowded as Amazon. So there are other names that we're focusing investors today. And I think you use this opportunity to let Amazon settle in. But I don't think anything's changed about the long term. And if you look at the multiple, it's not crazy. You still look at the sum of the parts for Amazon over a period of time, and you can get to higher levels. Short term, we don't disagree. I think there are better names. Google would be one that we like, that we'd be buying here.